Whenever we talk about climate change, we are talking about the greatest challenge of humankind. But it turns out that the greatest challenge is also the greatest business opportunity that we have today. Now, let me put it in a context here. We know that if we want to get to carbon neutrality, we need to invest 150 trillion by 2050, of which the 70% of it is expected to be invested by the private sector. Now, when we look at the private sector, in particular through the project capital life cycle, we know that there are mostly three main stages: seed capital, development capital, and infrastructure capital, which is where projects of 200 million and above are securing enough investments thanks to the support of large investment banks. But given the strong commitment in achieving a net zero economy, mid-market players, which are the ones that need to source funds from 10 to 200 million, are struggling a lot in securing capital. And this market segment is growing a lot. And this is because global investment banks do not have the capacity and the appetite to enter in this market segment. This is exactly what we do at Climate Kick. We are building a green digital investment bank which transforms the way funds engage with climate-related investments. By leveraging financial technologies, Climate Kick originates, structure, and distribute green infrastructure investments, scaling climate technologies and reshaping the landscape of sustainable finance. Our target ticket goes from 10 to 50 million, and we make money on both origination and distribution. We target an average profitability of about 3%, which means that for a minimum ticket of 10 million, we're going to make $300,000 per transaction. In the past months, we've been very active in the market, and we source projects across the United States, Europe, and Asia Pacific. Today, we are running our first commercial pilot, which is a solar microgrid transaction in the state of California of about 160 million, where we are going for an active bidding process with free investment funds. We released our prototype, which is a B2B platform where investors will have the opportunity to source asset classes across green investments, nature-based investments, and circular economy investments. By clicking, for instance, on the green investment side, they will find a broad selection of investment opportunities across solar, wind, battery storage, or green hydrogen. But this is just a tiny portion of the market. If we sum up Europe, United States, and Asia Pacific, we end up on a 13.5 billion of fees in terms of target market. To get into this global opportunity, I conceived Climate Kick since the very beginning with a global mindset. And we successfully developed our network in the United States, in UK and Europe, and in Asia Pacific. All these efforts brought us to be recognized by Barclays among the top 25 climate fintech startups all over the globe. All of this couldn't be possible without an extraordinary team of 8 people coming from the leading investment banks and technology firms all over the globe. And with such a team, we feel ready in keeping up with our revenue growth, which has as a target value for the first year 2 million of revenues, and to end up in 2029 with 110 million. Today, we already have 5 million of contingent revenues. To get to these numbers, we are running successfully the first safe round of about 500,000, and we are launching a 4.5 million round where we are looking for strategic partners as well as climate or fintech VCs, which stand ready to seize a multi-billion market opportunity. Thank you.
Okay, Eduardo, well done. Time for questions. Let's start with one about what your customers are saying about your model.
Yeah, absolutely. I can bring a real case here. The commercial pilot that we are running, the one in California, when we pitched the client, after the pitching, we realized that there was also Goldman Sachs behind the pitching. So when we realized that, we said, okay, the opportunity is gone. After a couple of weeks, we got the call from the client, and he said, look, we're going to give you the mandate because we understand that you understand very well this market segment. For Goldman Sachs, this is not the target market. They focus on large transactions, so they will never pay the same attention that you are going to make in this deal. So I think this is a very good traction that we got with our customers that we are seeing also in other deals.
Okay, a question in from the audience. What's the minimum investment and liquidity for investors?
So let me clarify on the investors. On the investor side, depending on how we structure the assets, we distribute these asset opportunities to traditional finance players, such as climate funds, infrastructure investors, or family offices. If it's a digital asset, we distribute their investment to digital asset funds. The minimum ticket is about $1 million per transaction, where depending on the kind of assets, this threshold might be larger than $1 million.
Okay. Moving on, given the low confidence in existing offset schemes, how can you give customers absolute confidence their investments are verified for true climate impact?
This is because of the underlying assets. What we are moving here, and one of the issues that we are addressing is greenwashing, which happens because whenever we talk about ESG funds, ESG investments, those targets are set at corporate level. So it's very difficult to track the way the Treasury is going to use their money. In our case, we're moving from a concept of corporate funding to project specific, so that the use of proceeds must be linked to the development of the specific project. And we do that by the means of an SPV, which raise the funds and distribute those funds to the specific projects.
Do you have a balance sheet, or is your service based in the facilitation between projects and investors?
Not as of now, because that would mean another kind of business. That would be, let's say, more an asset manager. We are not an asset manager as of now, because we would need specific licenses and capital requirements that we cannot have today. So what we do is the traditional American investment banking model, which is sourcing the asset, structuring it, and distributing it. We don't hold the risk. We just facilitate the two counterparties, the origination and the distribution. So capital seekers and capital providers.
Okay. Who are your competitors?
There are different players entering into the space. There are companies focusing on tokenization of assets when we talk about digital assets in particular. But we beat the competition given our strong focus on climate assets. Very few companies has such skills and expertise in this segment, specifically in the mid-market segment. And on the business team, we all come from this background.
Okay, do we have time for one more? We do. Do you have to underwrite the investment to win the mandate?
No, absolutely not. We don't underwrite the investment. We just bridge the two counterparties. And then in case there is a match, then the investors underwrites the opportunity with the project developer.
Brilliant. That brings us to time. Thank you very much.
Thank you.
Well done.